All right, so now that we finally completed the first section, now I'm going to be introducing to you, of course, purchase returns and allowances. So, of course, with that being said, when we make purchases, that means we also have the right to be able to return our items, okay? So oftentimes when we do buy items in large quantities, right, you're more likely to be, you're more likely to receive either damaged items, it could be a defective item. It could be the vendor could have sent you the wrong item, right, because they're sending you large quantities at one time. So, obviously not the only customer, so they could ship accidentally wrong to you. Or maybe you actually found a different location that can supply you your items for a lot cheaper price. Or also another one is customer service. If you know that their customer service is awful, their product promises to be something but it's not, and you've already tried this vendor before and you know that you're not getting anything out of it, that could be a very reason why you would want to make a return. So that's why we're going to be introducing to another contra account, which is going to be called the purchase returns and allowances. Hence the title of this section. Okay. Now, of course, with that being said, vendors, they give you they have their own policy on how to return or whether to give you an allowance or not. Most vendors, right, as you know, if they're trying to sell you a product at a really, really low cheap, because when you manufactured it, of course, you're manufacturing large quantities at one time, so your selling point's going to be very low. And these retail stores are your basically way to sell your product through a different platform, right? You can sell it to the public platform at a smaller scale, but the best way to distribute your product is going to be with those retail stores. So what these wholesale / manufacturer businesses, what they do is they want to keep your business. And how do they do that? Well, obviously they want to make sure that, okay, if something goes wrong, they'll give you a discounted price for it. They'll give you special offers. They'll give you even unlimited amount of returns and refunds, all right? Or even best money back guaranteed, all right? So that's what a lot of these manufacturers or vendors, that's what they do. They do this to ensure that you still are doing service, or you are still their customer and you are still continuing service with them, okay? But not all manufacturing companies are like this, okay? But typically when you are the vendor or you are the manufacturing and you're selling out to, and your customer is us as the retailer, you're more likely to want to do whatever it is to make sure that your products are being sold, okay? Because again, we buy in large quantities. So we are a customer in demand, all right? So with that being said, we're going to be introducing to what happens when you need to make a return. But first, let's go ahead and journalize this transaction. So on January 1st, you purchase 100 coffee mugs on account from Cuppies Co. Okay, and it costs you $1.25 each, and freight is going to cost you a total of $100. Record this transaction. Okay, so what am I going to journalize?
So you'll have the date of January 1st,
Good.
and it will be a purchase expense
Good.
of $125 on the debit side,
Good.
and then you'll have a freight expense below that
Mm-hmm.
with a debit of $100,
Mm-hmm.
and then below that we'll have our accounts payable noted with a credit amount of $225.
Correct. So we're going to recognize that this is what happened, right? We made a purchase of 100 I keep saying toys. 100 coffee mugs. Okay, and here it is. Okay. Now, here's scenario one where on January 5th, we've already received our items and we found that there was a total of 10 coffee mugs that were broken, right? And you request the vendor to refund you for the full amount. So, again, the vendor grants you a full refund. So, how do you record this transaction?
Okay. It's a reason to afford. All right, so they were $1.25 piece.
Mm-hmm.
Cents. All right, so you're gonna start with the date
Mm-hmm.
of January 5th,
Mm-hmm.
and then we're gonna have under the description, is it gonna be purchase and returns, damaged items, something along that line?
You're going to use that account, but it for sure will not come first.
Is it like you're getting money back? Is it a receivable or no?
Remember, accounts receivable is when customers owe us. We're dealing with a vendor.
Right.
So it's an expense, but it's a credit on an expense.
Yes. Good. You're gearing towards the more correct answer. How did we pay them?
So we did our accounts payable,
Correct. And we're getting a refund, correct?
right?
So in this sense, we're getting a credit memo and applying it to the invoice. So what is my first assumption I'm going to record?
Your first assumption that you're going to record.
Mm-hmm. I'm getting a refund.
Refund?
Not purchase expense refund. Okay, so if I owe them money
Oh,
and I'm getting my money back, essentially.
this is the same thing I got hung up on before. It's gonna be the same way.
Sort of. So what's my first account going to be?
It's not. It's credits, purchase credits.
No, hang on. I didn't. I have to go back. I have to go and look. I don't know there's a word I'm not getting.
Okay. Now, what is the title of this section?
Purchase returns and allowances.
Purchase returns and allowances, okay? So that's going to be a contra account.
Not right now. Here's your phone.
Okay. So if I'm refunding money, what should be my first account that I am going to recognize?
Payable.
Accounts payable, good. And then what is the title of this is?
The title, you mean description?
Oh, no. What is the title of this section?
No, returns.
Yes. So this is what you're going to do. So essentially, right? Because we've made the assumption that we owe them money, right? And we made our purchase of items already. So we've already received it. So we still owe them money. But if we're telling them to give us a refund, right? How do we pay them? we didn't pay them. We owe them money. But if they're essentially refunding us the money, right? So therefore, you're going to decrease your accounts payable. You're going to decrease the amount that you owe. So that's the first assumption, right? You're decreasing the amount that you owe. Second account that you're going to recognize is your purchase returns and allowances, okay? So again, this is a purchase returns, okay? Hence, we're refunding, returning items. So in this case, purchase returns and allowance, it's a contra account. It's a contra account to the original purchase expense, right? We're decreasing the amount of purchases that I originally made. So by decreasing it, I'm going to place it as a credit for the total amount of $12.50, right? Because it's $10. I mean 10 items at $1.25 to give us a total of $12.50. Yes?
Yes.
Okay.
Getting it.
All right. Scenario 2 now. On January 5th, okay, you received your items and you found that 25 of them were the wrong size. Oh my gosh, okay? So you requested a full refund on the extra large coffee mugs. But the vendor, they offers you a 20% discount and lets you keep the items, okay? So in this case, right? You already made the purchase. It's going to cost you probably what? $25 to ship those items back because originally it was like $100 freight, right? And 25 of those items are the wrong size. So what they did was they are like, I'm so sorry. I sent you the wrong cups. So what they're trying to do is they want you to keep the cups, right? Keep them because ultimately they have too many cups in their warehouse. So they're just saying, you know what? I'll give you an additional discount because you've already made the purchase. So in this case, you're going to accept this 20% discount. All right, so what am I going to do here now? How am I going to journalize this transaction?
You're going to start with your accounts payable again
Mm-hmm. Mm-hmm.
on the debit side?
Because you're essentially getting your money back, correct?
Right, because we've already paid it, so we need to credit that back with 20%.
Now, the question is it where is this 20% coming from? Is it off the whole entire amount or is it just the cups I'm returning?
It's not super, super clear, but I'm going to assume that it's the 20% is only coming off the items that we were trying to get a full refund on.
Exactly. And that's the terms allowances come from, right? So you're attempting to return a product. The vendor says no. But they decided to strike a deal with you because obviously if they say no, right? What's going to happen? Oh, possibility I'm no longer going to contract with this vendor anymore. So they're saying, you know what? I'll give you additional 20% off because I'm sorry. I sent you the wrong cups. But you could still use those cups, right? In your store. So they're trying to strike a deal with you saying, you know what? I apologize. And by doing that, instead of shipping these items back for me, I'll give you a 20% discount. So it's only the 20% off on the original that you're trying to refund. And in this case, it's only on the 25 cups. Now, assuming because you've already paid for it, right? You've already originally paid for the regular size cups for the price of $1.25. So in this case, they're not going to raise the price. They're going to give you a discount off of the $1.25 because they're saying, I'm sorry, I sent you the wrong product. So in this case, how much is my allowance going to be for?
$6.25.
Mm-hmm. it's going to be for $6.25, okay? So we acknowledge that 25 of those cups costing me $1.25 is going to give me a grand total of $31.25. Because they're giving me a discount of additional 20%, we're going to take that 20% off of the $31.25 to get a grand total of $6.25. So essentially, I got about, what, 3 cups? 2 cups free? 3 cups free? If you think of it that way. Okay? So, yes, when we're dealing with purchase returns, boom, purchase returns. When we're dealing with an attempt to return, but instead we get an allowance, then that's where it is a purchase allowance. So these two, you can separate them. For many companies, they do separate them. But in this case, they essentially do the same thing, right? They're decreasing the value of your assets or your purchases, and essentially they're decreasing the value that you owe. And in return, all it really is did you return the item or did you just get a discount off the item? Okay? And in this case, they essentially function the same. So purchase returns and allowances are the same. Okay? Any questions in regards to purchase returns or allowances?
I'm sure I'll have some in the future, but right now, everything's right here that I see, so I'm okay right now.
Good.
I have more.
And that is the summary of this chapter. So it's a small section, and usually I put them all together. So in this case, here's a little quick review on what happens when you make your purchase returns or allowances, right? The original one is making the purchase. The second one is making a full refund, and the other one is making an allowance, an attempt to get a full refund, but they give you a discounted price on top of that. So that is it for chapter 5.2. So let's go ahead and dive right into the exercise here. Okay. All right. Okay. So we're going to assume all of these are also on an account. Okay. So we can properly return or give us allowances in the correct manner. Okay. So in this case, what happened on April 5th?
Okay, April 5th,
Mm-hmm.
purchased 1,000 units at $5.
Mm-hmm.
This freight was $100. So, have the April 5th date, the purchase expense of 5,000 in the debit. Then you have freight expense of $100 in the debit. Cash to pay, and that would be cash.
Assuming that everything's on an account.
Oh, okay, sorry.
No worries.
Then it will be accounts payable of 5,100 in the credit balance.
Good. Okay. Now, what has happened on April 7th? What happened?
We returned 200 damaged units for a full refund.
Okay. So, April 7th. Okay, assuming that each transaction is going to be from the prior one. So, because you're not gonna return something that happened on the 15th on the 5th, right? So we're just gonna assume that these happened right after you received your items and you made your purchase. Okay. So in this case, on April 7th, what are we gonna do here?
So we are going to do accounts payable
Good, because we're essentially getting a refund.
from that account, right?
Mm-hmm.
200 items, which is going to be $200. Is that right?
How much did we originally purchase them for?
I can't see that line. I'm sorry.
There you go.
1,000 units at $5 a piece. So it's $1,000?
Okay.
No, that's not it. Yeah, $1,000.
Yep.
Let me double check.
Okay.
And that's gonna go under our debit side.
Okay. So we're getting back $1,000. Okay.
Yep. And then below that, we're gonna indent, and we are going to do our returns and allowances account purchase. There we go. Purchase returns and allowances.
Okay.
And we're gonna credit that for $1,000.
Good. Good. Now, no descriptions are necessary here until we move on further into inventory. All right, when we're actually dealing with the entire chapter. All right, and we'll talk about that later because, again, it's important that you just understand how to just get the foundation in the beginning. Okay. So, what has happened on April 10?
Okay, let's see here. April 10th, purchased 750 units at $5.75 each.
Mm-hmm.
And so, the date of the April 10th with a purchase expense. And the purchase expense price is, under the debit column, will be $4,312.50.
Okay.
And then we have the freight expense of $75. And that would be, under that is, that's accounts payable
Mm-hmm.
in the credit column for $4,387.50.
Three, the 4, 3, oh, whoop, 4,807.50.
4,387.50. Yeah. All right.
No worries. Okay, good. What happened on April 15?
We returned 50 broken units due to the shipment for a full refund.
Okay, so
Okay, so we're gonna put the date, yep, and then it's gonna be accounts payable.
good.
And our amount is gonna be $287.50.
Okay, how did you get that number? Oh,
I went through and I took the information from above of $5.75 a unit, and I multiplied that by 50.
good. So we get 287.50 as
Yep.
our refund. Now, where am I going to be putting this?
And then below that, indented, you're gonna do your purchase returns and allowances again.
Purchase
And then on the credit column, we're gonna do the amount of $287.50.
287. 287. One more. 50. Good. Okay. What has happened on April 20th?
April 20th, purchased 200 units at $6 each. That is purchase expense.
Okay.
The $1,200 under the debit column.
Purchase expense. For $1,200
expense.
freight expense. No, no worries.
And freight expense is $20. So that is, then the next line will be the accounts payable in the credit column of $1,220.
Good. All right. And then what has happened on the 22nd of April?
25 units were the wrong color. I'm willing to accept 20% discount. Robin, I know we kind of have been going back and forth. Do you want to do one with a discount? I know you
I was
haven't.
gonna say, I was just gonna cut into it, but that's no worries, and we'll just,
Yeah, do you want to do this one or no?
is there, oh, that's okay, yeah, I can do it.
Okay. Well, I just, it's the last one with the discount,
No,
so.
yeah, I get you, no worries, yeah, no, fine. Okay, let me take over then. April 22nd, okay. 25 units for the wrong color, willing to accept discount. Okay, so. That is at 25 of the 6th.
Okay, so 25 of the $6 are at you're very quiet. I don't know what happened.
Yeah, I'm just doing my own calculations to make sure before I start talking to you and you're like, what are you saying?
Okay.
Is that I'm just going from the purchase right above, right? Up to 200 units
Mhm.
at $6. So I'm assuming these 25 were the wrong color. So
Mhm.
25 at $6,
Mhm.
which is 150,
Mhm.
but we're getting 20% off of the 150,
Mhm.
correct?
Mhm.
So that's $30.
Okay.
Okay, so then on the spreadsheet there, it's going to be the April 22nd accounts payable in the debit column of $30.
Good.
And then it's purchase returns and allowance
Mhm.
for $30 in the credit column.
For $30 in the column. Huh. So strange. Yeah, this is my third time around this, and I always end up getting one short. Okay, there you go. So if you want to, you could draw a box right there, Robin. It should be able to take it in, but okay. So what happened on April 25th? Wait, did I put it for $30? Yes, I did. So what happened on April 25th?
I'll just go ahead and do the rest since Michelle's already done this one before, probably, right?
Yeah.
Okay, so April 25th,
Mm-hmm.
purchased 500 units at $6.25.
Mm-hmm.
That is the date, April 25th, purchase expense
Mm-hmm.
of $3,125.
Mm-hmm. So you might need to make a little more lines down here. I'm just gonna go ahead and do it right here. So what was it, April 25th? Purchase expense for 3,125. Okay.
Freight is $50 in the debit column. And then it will be accounts payable for $3,175 in the credit column.
Good. All right. And in this case, there's no returns or allowances for this. So I'm going to go ahead and 3,175 even. Oop. Good. So that's pretty much returns and allowances. Now wait till we actually apply this when we finish up with chapter 6 because it's going to be more extensive and more massive. But in this case, we practice what happens when we have our returns and allowances and we know what to do. We have an account designated for it. Purchase returns and allowances. Boom. Okay. Okay, so now it is exactly 3:30. So I'm going to go ahead and pull up chapter 5.3. We're just going to go over the concept and then we can just call it a day and do the exercise the next day, okay? Because I kind of don't want to let you early just yet unless you guys want to go. I mean, we still have half an hour because either way, we are on track. We are exactly where we are. But if we do move forward, that means Thursday is going to be the chapter 5 exercise review. Okay, because tomorrow, most likely what's going to happen is we're going to do our 5.3 exercise. We're going to learn 5.4 and then do the 5.4 exercise. And then Thursday's 5.3. And then, Wednesday's 5.3. So at that point, if we just move forward, then Thursday, all I have to do is just make sure I review the chapter 5 exercise with you guys. Okay. Let's do it. Okay. Okay. So let's move forth and pull up chapter 5.3. So you guys were actually, this is the last thing that we learned. We actually got through to the 5.3 not exercises, but we did get to the 5.3 periodic inventory lecture. So let me go ahead and stop the recording here.